Investing in blue chip stocks. How to invest in the most reliable companies. Picture this. During the 2008 financial crisis, the Dow Jones Industrial Average, a popular index of blue chip stocks, dropped by nearly 54% from its peak in 2007 to its low in 2009. The massive decline wiped out over $11 trillion in market value. Which begs the question, are blue chip stocks really worth it? Today, we're going to discuss in depth what a blue chip stock is, why you should invest in blue chip stocks, and how you can actually start investing in them and make consistent profits. Please pay attention up to the end so you don't miss a single step. Before we begin, be sure to hit subscribe. Some of you guys might be thinking, what are blue chip stocks? You see, the origin of the term blue chip can be traced back to the world of gambling, where blue chips are the most valuable and sought-after chips on the table. Similarly, blue chip stocks are the most valuable and sought-after stocks in the market, with their market capitalizations in the billions of dollar range and a track record of consistent performance. Ideally, blue chip stocks are like the crown jewels of the stock market. They represent the most reliable, established, and successful companies that have proven themselves over many years. You'll find many of these corporations behemoth and right on top of the S&P 500 or the Dow 30, including household names like IBM, JP Morgan, Chase, and Walmart. These are the companies that have weathered countless market storms and are still standing tall, ready to help build a solid, long-term investment portfolio. Investing in blue chip stocks is seen as a safe and stable way to grow your wealth over the long term. Think of them as companies that have a proven track record of weathering economic downturns and still delivering consistent returns to the investor. Blue chip stocks are often included in retirement portfolios because they offer dependable sources of income through dividends at the same time. Some more examples of blue chip stocks include Microsoft, whose market capitalization is over $2 trillion, Johnson & Johnson with a market capitalization of over $450 billion, and Visa with a market capitalization of over $500 billion. These companies have a solid reputation for quality and dependability and are usually market leaders in their respective sectors. So, why should you invest in blue chip stocks? The term blue chip has become synonymous with stability, reliability, and prestige in the stock market. While many stocks can experience volatility and unpredictable performance, I like to view blue chip stocks as the gold standard for long-term investments, for myself, seeking dependable returns. One of the unique features of blue chip stocks is that their historic track record is stable or rising for dividend payments. This means that in addition to potential capital gains from the stock price, investors can also receive a steady income stream from regular dividend payments. In fact, some blue chip stocks have been paying dividends for decades or even over a century, making them an attractive option for income-seeking investors. Now, these blue chip stocks are often included in major market indexes and averages, which serve as a benchmark for the performance of the overall market. This includes well-known indexes like the Dow Jones Industrial Average, the S&P 500, the NASDAQ 100 in the United States, as well as regional indexes like the TSX 60 in Canada and the FTSE index in the United Kingdom. By investing in blue chip stocks, you can gain exposure to a diverse range of sectors and industries and benefit from the overall growth of the market itself. So it's safe to say that blue chip stocks are the epitome of stability, reliability, and prestige in the stock market. With a track record of consistent performance, long histories of dividend payments, and inclusion in major market indexes and averages, these stocks are an attractive option for those who are seeking dependable returns and a solid foundation for your portfolio. Sounds nice, right? Which all leads us to the next question. How do you pick the best performing blue chip stocks? Here's the thing. Investing in blue chip stocks can be a great way to build long-term wealth, but you need a plan. Here are some unique and intriguing tips to help you identify and invest in blue chip stocks. Number 1, consider the impact of ESG factors, environmental, social, and governance. ESG factors are becoming increasingly essential for investors, as companies that prioritize these factors tend to perform better over the long term. For example, Microsoft, MSFT, is a blue chip stock that has made a commitment to being carbon negative by 2030 and has also prioritized diversity and inclusion efforts. These factors can contribute to a company's long-term success and may also align with your values. Number 2, look beyond the PE ratio. Now, while the price-to-earnings (PE) ratio is an important metric to consider when evaluating stocks, it's not the only one. For example, AAPL is a blue-chip stock that has a relatively high PE ratio, but it's also a company with strong brand, a loyal customer base, and a history of innovation. These factors may indicate a company's ability to continue growing and delivering value to shareholders over the long term. Number 3, pay attention to industry disruptors. You see, blue chip stocks can be disrupted, just like any other company. So you need to pay attention to industry trends and emerging disruptors. For example, Amazon disrupted the retail industry with its e-commerce platform, and now it's expanding into healthcare and other industries. Exciting times. By investing in blue-chip companies that are adapting to change and staying ahead of industry trends, you can potentially benefit from their continued growth. Number 4, consider dividend aristocrats. Dividend aristocrats are blue-chip companies that have increased their dividends for at least 25 consecutive years. These companies tend to be financially sound and have a strong history of rewarding shareholders. I like to visualize Coca-Cola, KO, and Procter & Gamble, PG, when I think of dividend aristocrats that have consistently increased their dividends over the years. Number 4, look for blue-chip stocks with growth potential. While blue-chip stocks are typically known for their stability and reliability, many blue-chip stocks have significant growth potential. Look for companies that are expanding into new markets, launching new projects, products, or investing in emerging technologies. Think of Tesla, for example, whose growth potential can be seen in its financial performance over the years. Tesla has a history of innovative products and services and expansion into new territories, which continue to drive growth for the company. In 2021, the company's revenue increased by over 70%, reaching a record high of $31.5 billion, and its net income grew by almost 200% to $1.7 billion. Additionally, Tesla's market capitalization has grown significantly, reaching over $1 trillion in 2021 alone, making it one of the world's most valuable companies. So, how do you now start investing in these blue-chip stocks? You see, investing in the stock market is a fascinating way to grow your wealth, but it can also be overwhelming and intimidating to beginners, especially. There are so many options available, so it can be difficult to decide where to start. So, should you buy individual stocks or invest in a mutual fund or ETF? And what kind of broker should you choose? Let's take a closer look at the available options. Let's say you want to purchase stocks individually. You can do so through a brokerage firm. A brokerage firm is an intermediary that connects buyers and sellers of securities. Ideally, there are 3 types of brokerage firms to choose from: online brokers, full-service brokers, and discount brokers. An online broker will offer you self-directed trading platforms that allow you to buy and sell stocks and other securities online. You can reach companies, stock market trends, and execute trades from the comfort of your own home. Some good examples of online brokers include Robinhood, TD Ameritrade, and E-Trade. On the other hand, a full-service broker will offer you personalized investment advice and tailored investment plans. They typically charge higher fees than online or discount brokers, but they provide a more comprehensive service that includes research, market analysis, and financial planning. Some proven full-service brokers include Morgan Stanley, Merrill Lynch, and Wells Fargo Advisors. Now, discount brokers offer basic trading services at a lower cost than full-service brokers. They may provide some research and analysis tools, but they do not offer personalized investment advice. Some good discount brokers include Charles Schwab, Fidelity, and Vanguard. Once you have chosen a broker and open an account, you'll need a deposit to start investing. You can then place your first buy order for the number of shares you want to buy of a given stock. Most of these brokers have some easy-to-navigate apps that make your work way easier. For example, let's say you decide to buy shares of Apple Inc. You would enter a buy order from the number of shares you want to purchase and the price that you're willing to pay. If the price is within the current market range, your order will be fulfilled, and you'll become a shareholder in the company. Now, let's say you want to invest in Johnson & Johnson, J&J. Is currently trading for $151.43 per share on Seeking Alpha and pays out an annual dividend of $4.52 per share, translating to a solid 2.9% annual dividend yield. But let's cut to the chase. How much can you actually make from this investment? Say you're looking to earn $5,000 a year in passive income from J&J dividends. To do so, we take $5,000 divided by 4.52 to determine the number of shares you need to buy, which gives us 1,106 shares. This would set you back $167,511. It may sound like a hefty sum, but keep in mind that dividend investing is a long-term strategy. You can start small and then let your investment continue to grow over time. In 10 years, you'd accumulate $50,000 without even lifting a finger. and if you continue to invest regularly over time, who knows how much you can earn. Investing in blue chip stocks may not provide the same level of excitement as investing in smaller, high-growth companies, but it can provide a reliable source of income and help to protect your portfolio against market volatility over time. With a bit of research and solid investment plan, you can make the most of your money to have a smooth retirement. If you found this video helpful, hit like and subscribe to our channel. See you in the next one.